What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, in the last 24 hours, a lot has changed. I really think the Fed, at least the outlook, is starting to pivot in a far more aggressive manner. In yesterday's video, I had stated that only 30% of the market is currently being priced in for a 75 basis point hike. As of today, that number is actually tripled. We're going to go over exactly where analysts and the expectations are going forward, and why a 50 basis point hike actually could hurt the market. I'm going to cover everything, give you my opinion on it. So let's get right into it. First off, the May CPI report really took any kind of idea of pausing rate hikes off the table. This was a headline from just a couple days ago. The pause comes from Fed President Bostic, and he had stated after multiple month after month rate hikes, he believes that the Fed should actually pause in September, see how the economy adjusts. Well, because we've had inflation reach a new high of 8.6%, and there is no sign of a peak as of just yet, you already see the media covering saying that it's completely off the table. In yesterday's video, this number right here for a 75 basis point hike, we're currently at between 75 and 100. This is 150 to 175, was only 30%. And I had stated that if they came out a little bit more aggressive on that 75 basis point hike, it would really shock the market. Well, now you are seeing the table completely turn. This number got as high as 96% for today. And that is not just June. If you go over to July and look at the 225 to 250, it's at 90%. And 250 to 275 is at 95% or at 5%, meaning the chance of two 75 basis point hikes by July is a 95%. That is currently what the market is pricing in. You've seen inflation just continue to run rampant. Gas is only going further. And obviously you've seen the market pull down. Well, here's where things change a little bit, okay? Back on May 4th, Jerome Powell had stated, at least this is an article from May 4th, maybe I think he might have stated the day before, but he had said that a 75 basis point increase is not something that the committee is actively considering. The reason being for that was because it was likely to shock the markets. However, and I've stated this before, when you are solely using the fact of raising interest rates, raising that Fed fund rate to fight inflation, the Fed fund rate needs to be higher than inflation in order to combat it. And you can see the difference. We're sitting at 1% as of right now. Let's say we get up to 2.5% by July, mid to end July. We're still sitting at 8.6% inflation as of now. Let's say it comes down a little bit. You're still sitting at, let's say, 7.5%. Very big gap. So it's going to take a lot of time for this to change going forward. And they're actually raising interest rates into a slowing economy. That is a completely different story going forward. But as you can see in early May, that 75 number was completely off the table. As of yesterday and over last night, Fed is likely to consider a 75 basis point interest hike, the biggest since 1994. Same thing right here from Bloomberg. And Wall Street traders bet Fed will hike interest rate by 75 basis points. That is currently what the market is pricing in. Today, we had a little bit of a pop coming into after hours, into the open, got back up to that 380 level very, very early, in the morning in the futures market, and then continues sold off, bounced off that 370 level to that 375 psych level, just really moving back and forth. Volume was 95% of your daily average. However, it really seemed like it couldn't catch a bid in either direction, and it was just controlled by the algorithms all day. But from a broader view, when we zoom out to that daily chart here, we have massive red and these huge gaps going forward. Now, coming up to tomorrow, I don't want to say that I fully expect them to do look at it, just changed 92%. I don't want to say I fully expect them to do a 75 basis point hike, but here's my personal opinion on this, okay? If you go back 6 months ago, 8 months ago, whenever the Fed had stated that they were going to continue their quantitative easing, they were going to continue the easy road, the low interest rates, the free money, the market would rally. Back in July, August, September, even October, when they would come out and say, "No, we're not going to do anything yet. We're not doing it for 6 months from now." It was slow into it, and it would pop right after. It was a repeatable play. However, things are changing, and because they know that the Fed needs to act aggressively in order to fight inflation before we get to run into hyperinflation. And now the average gas price goes from just over $5 a gallon to over $6 a gallon, $7 a gallon. and that of course will get passed on to every single commodity that we purchase because it is all traveled by fuel, the Fed will lose their credibility. Meaning, if they don't show that they are going to take action and be aggressive and actually stick to their word of they were going to fight inflation, even though they have failed on their words for the last entire year, I think it might really shock the market. Now, that doesn't go to say if we get a 50 basis point hike tomorrow, the market is going to crash. However, I do feel like investors will really, even more than they already are, will really sit back and just say, listen, you've got no chance at this. We've completely lost credibility. You've shown us that you're not even going to be aggressive after being extremely patient, and therefore we're losing credibility, we're losing faith. You've completely lost it. The market is just going to continue to tank. There's nothing you do to save it, and therefore a recession, if not a depression, is almost guaranteed at that point. Okay, so that is a little bit of a speculativeness going into tomorrow, but when you see that number come out and when you see Jerome Powell talk, which that's really his tone, okay, is something to pay very close attention to. That's how the market moves. It is what he states, but his tone is even more important. But look for that 75 to actually be normalized as of now, okay? So this changed a lot overnight. And if you do get the 50, I wouldn't be surprised if there is a bit of a pullback. It might not happen right away. We might get a little bit of pop on news after that, try to rally. You'll notice by the volume, but it might pull back. And just like I said, they're going to lose that credibility, and therefore that's going to be it. So guys, that's it for this video. I'll see you in the next one.